Question 4, Paper 1, 2019. We are going to do the inventory question. When you see inventory, you need to know that there are two methods that we can use to calculate the closing stock. One is FIFO, one is weighted average. Let's see what they want us to do. The business uses the periodic inventory system. When you read periodic inventory system, you already know that closing cost of sales has got a whole calculation. That's for the sake of interest. Then, the weighted average method of stock valuation is used for rugby balls. So when we look at the information with regards to the rugby balls, we need to calculate the value of the stock at the end of the year using weighted average. And when you see weighted average, you know you've got to work with the totals. And the totals of the opening stock and the total of the purchases minus the returns. But let's start. They're giving us the opening stock. They give us the value, they give us the cost per unit, but they don't give us the number of units. So let's quickly just work out what is the number of units. So it's 432,000 divided by 120. It's giving me my 3,600 and fill it in as you are reading through this question. Our rugby balls at the end, that's our problem. We have the number of units, but we don't know what's the cost per unit. Therefore, we can't calculate the total value. The rest of the information is all about purchases, the units bought, and the total value. We also have sales. Here we have the total sales and the unit costs. Again, we don't know how many units, so let's just work that out. 3,360,000 divided by the 320, it's 10,500 units. It's just because we know we work with price per unit, number of unit, and total. And then they give us markup percentage on cost, and they give us the stock turnover rate. When we see something like this, the financial indicators, you must remember that it's possible that you will have to find a missing amount here. So stock turnover rate, if you look at the stock turnover rate on your formula sheet, then you will see it is cost of sales divided by average stock. So again, cost of sales, you're just putting in what you know. You don't know yet what they're going to ask you. Divided by the average stock. That is your stock turnover rate. And then more information. A total of 70,200 was paid for the carriage on the rugby balls. Balls and Bags for Africa sponsored 200 rugby balls to an underprivileged school that was hosting a rugby festival at their school. So there's no returns in this activity. Now we can start and we can look at the questions. So they ask us, number 1, Hector suspects that rugby balls are being stolen from his business and asks you to investigate whether his suspicion is correct. So let's see, what are we supposed to have on hand? So we will start with 3,600 as our opening stock, the units. We deduct from that the 2,600 that they say is on hand. There's no returns, but we did have some sales, so we deduct the 10,500 units because we sold them. And then we purchased 10,200. And remember, we also sponsored 200 rugby balls, so we gave the 200 rugby balls away as well. So let's see what is our answer here. 3,600 minus 2,600 minus 10,500 plus 10,200 minus 200 is 500. And that 500 is what he is suspecting being stolen. So we've got 3,600, 10,2 minus 10,5 minus 2,6 minus 2 is the 500. And that 500, this answer should have been 0. It's not, it's 500. So therefore, it's the stolen balls. So you write 500, stolen. Now the next question is calculate the value of Hector's closing stock for rugby balls. Now remember, they want you to use weighted average. Now for the weighted average, you have to calculate the opening stock plus all the purchases minus the returns, the total values and the units. So let's have a look now if we can find that. The opening stock value is 432,000 plus the value of all the purchases, and that is already added for you, so that is plus the 1506,000. There is no return, so we don't have to deduct the returns from that, but you also know that we have to add carriage on purchases if it's not included in the purchase price. So we're adding carriage on purchases because in this activity it's not included in the purchase price. And they gave us a total of 70,200 was paid for the carriage. So we're going to add the 70,200. Now we have to divide this by the number of units we have in the opening stock, which is 3,600, plus the number of units we bought, which is 10,200, and no units were returned. So we add all of that together, and we have the value of the stock is 2,600 units at the end, the closing stock, times this answer that we're looking at here, which is 145.52. We times it, and we get the value of the closing stock is 378,300. So if we do it on this side again, you calculate that top answer, which is 432,000, plus the 1506,000, plus a carriage of 70,200, which is 2,008,200 divided by the 3,600 plus the 10,200 divided by the 13800, and that's going to give me 2,008,200 divided by 13800 is the 145 rand 52 cents. The 145 rand and 52 cents. Just remember, this is not your final answer. This is the average price. Now you've got to times it by the number of units you have on hand. The number of units you have on hand, and that is where we get our answer from. 378,300. The kickbacks, though, the rugby balls and the FIFO method is used for the kitbacks. So if we look at the kitbacks, they say we've got 750 kitbacks left at the end of the year. And we need to find, using FIFO, the value of those kitbacks. So if we use FIFO, remember we said bottom up. So we are trying to take the 750 kitbacks that we have. So let's look. Bottom here, there's 300 I can take. I can take 300 out of there at the price 300 Rand per unit. Now I still need 450. Of course, 450 plus 300 is the 750. Now I go up and I take 450 out of January at 225. And I've got now my whole 750. So I don't need to take out any more. And now I just calculate that. So here I've got 300 times 300 is 90,000. and I've got my 450 times 225 is 101,250. And together, that's going to give me my value of my closing stock using the FIFO method. Let's just see here the way they've done that. 300 times 300, 450 times 225, that's your average price. The next question is calculate the cost of sales figure for kickbacks. Now remember, we are in the periodic inventory system. That means I need the calculation of the cost of sales figure according to the opening stock plus the purchases plus the carriage on purchases plus the custom duties minus the closing stock that will give you my cost of sales. So you know how that works. So let's have a look. Back to the information. Right, we've got the 405,600 as our opening stock. Purchases. Let's see, we'll have to find the purchases, which is 1,600,000, but let's just check that. So we have cost of sales. The opening stock is 405,600. The purchases is all of that, 160,000 plus 405,000 plus 945,000 plus 90,000 is 1,600,000. That's the purchases. Now the carriage on purchases and the custom duties, carriage on purchases, custom duties. But here, the carriage on purchases is included in the cost, so I don't have to put it separately there. The only other thing I need now is the closing stock, because the carriage is included, so I don't have to deal with that. There's no custom duties. Now I have to deduct the closing stock. And the closing stock is what we've calculated. We've calculated the closing stock of the kit bags as 191,250. So I deduct the 191,250, and that will give me my cost of sales. I hope you see that we are using what we've learned after we've watched all the videos. Minus 191,250, and that is 181,450. Cost of sales is 181,450. And in our memo, 181,450. The next question is the markup that was achieved on cost. Now markup percentage is what we are looking for. And we know that is selling price minus cost price divided by cost price times 100. And we are dealing with the kit bags. So we're looking for the selling price of the kit bags. Let's see if we can find the selling price. There's our selling price for the kit bags, 2,373,000. 2,373,000 minus, we've worked out the cost of sales, divided by the 181,435, and that is going to give me a 2,373,000 minus 181,450 divided by 181,450 times 100, it's 30,79. So it's a 30,79%. Look here. There's our selling price divided by our cost price times the 100 minus the 100. That's a different way of calculating it. I prefer the one where we take the selling price minus the cost price, which is this answer, divided by the cost price. That gives you 30,79%. And now the last one is the stock turnover rate. For the stock turnover rate, we need to know how we calculate that. That will be on your formula sheet. Stock turnover rate will be on your formula sheet, but it is the cost of sales divided by the average stock. We're still busy with the kickbacks, and the cost of sales we've calculated as 1814. 1814 350. 1814 350 divided by average stock. Average stock is beginning plus end values. So we've got the beginning. The beginning is 405 600. And the end value, we know that we calculated the kickbacks. The closing stock of the kickbacks is 191250. Yeah, that's 191250. And then we get the half of that. So let's see. So it's 405 600 plus 191250 divided by 2, which is 298425. So the stock turnover rate is 1814 350 divided by 298425, which is 6,08 times, or 6 times. There is the whole calculation as I've explained. 6,07 times. I've got 6,08 times because I've rounded it up on the calculator. This is the explanation of your inventory, question 4, paper 1, 2019.